How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data recorded on July 9th, 2019. Here's a snapshot of the positions held by the institutions as of that date. So let's start by taking a look at gold. What do we have here with gold? So on last week's report, I mentioned when long positions were at 312,000 that they were very aggressive with their long positions and that we would likely start to see some profit taking on those long positions. And now what can we see? That's exactly what they did. They started taking profits on longs. So they reduced longs from 312,000 to 306,000, and that came as price was consolidating with some downward pressure right over here at the highs. So as they took profits on those longs, they also slightly increased their shorts from 53,000 to 61,000. Okay, that now drops long exposure from 85% down to 83%, and net positions down from 258,000 to 244,000 to the positive. So what is likely taking place here? So we're at these highs. They just removed some supply of theirs here and here, and we're overextended with long positions. Total size as well has been very aggressive. So it is likely that what's going to happen is they're going to continue taking profits on their longs, likely continue to add to their shorts, and when they do both of those things, add shorts and take profits on longs, it will cause price to drop like this. Okay, it's not 100% guaranteed that that's going to take place, but it's likely what is going to take place. So we're watching for that and watching for that drop so that we can eventually position ourselves to get in long just like they are. Alright, so now we take a look at oil, and we see that as price was declining here, they closed off some longs. Okay, that causes price to drop. They also closed some of their short positions, so shorts overall are still cooled off. Longs becoming a lot less aggressive since back in April and May, and now we're still sitting at 81% long exposure. Not as aggressive as what they were here when we initially saw the profit taking. So now we're rallying back up, and it is likely that we're going to see price continue to the downside in the weeks to come. So we're still waiting for a few things to take place before we can know this for sure. Now we take a look at the US dollar, and we see an increase in long positions as price rallied straight up right off the tested area of demand. We were expecting a move up. We were looking at the other dollar pairs, and we saw great potential for a move to up to take place because of the demand that price was responding from, and that's exactly what has taken place. So with this move up, it pushed long exposure up to 79%, and net positions up as well from a positive 22,000 to a positive 27,000. Now we're sitting within supply, and right now we got the forces pushing price downwards. So how far down is this going to push price is what the question is. So now we take a look at the Aussie. So back here in June, we knew that they were going to likely take profits because they were so overly exposed to the short side, and that's exactly what took place. So when they take profits on shorts, it causes price to move up, which is what has taken place. And so we see a slight drop, and then all of a sudden, this past week, we see a move to the upside. It opens up the doorway for a move up into this weekly area of supply, and that's what we're watching for. Okay, because they're still very aggressive with shorts. They could continue taking profits on those shorts, which will cause price to move to the upside. Now we take a look at the US CAD. We see that for the last few weeks, longs were massively reduced, and now we're seeing a big jump, dramatic jump in shorts, and that is what's causing this big bearish pressure here on the charts. So if you take a look, you see sentiment is bearish right now, and that net positions are in the negative as well. So how much downside is the big question here? We could see a reaction from this area down here and then a push to the upside, but it's hard to judge right now because they are in the middle of taking profits and not accumulating, not so focused on accumulating a position. Okay, we started to see an accumulation of a short, so that could easily drive price lower, but that's just the beginning stage of an accumulation. So we're waiting for more evidence to judge what is taking place with this chart. On the US Swiss franc, we see that longs are very cooled off. We see a slight increase in short positions, but both are still very cooled off. We also see them cooling off their aggressive long bias. Okay, so the sentiment is becoming more neutral right now, and that takes place as price was rallying up. We now see that price is responding from the weekly bearish engulf, and we're seeing some downward pressure. So if the dollar does indeed react from that weekly supply and cause a move to the downside, we got the US CAD prime for a move to the downside, and now we're seeing this chart prime for a move to the downside. So far the dollar pairs are looking pretty decent for a move to the downside. That takes us to the Euro US dollar. We see an increase in longs from 157 to 158, but we also see an increase in shorts from 188 to 194. That came as price was dropping, so the increase in shorts would make sense. Price is now sitting within an area of demand, so we can clearly see that there's the potential for a move to the upside. Sentiment is still somewhat neutral, so not really telling us much when we take a look at the data. Now we have the pound. We see the pound has increased their shorts from 97,000 to 109, which is what caused this big drop on the weekly chart here, down through a weekly area of demand, creating new supply up here. We see total positions also very aggressive, so it is likely that they're going to start taking profits, aggressive profits with those shorts. And what will tend to happen with that is price will move to the upside. So if the dollar drops and the euro rallies, it's likely we're going to see a rally on this pair as well. Now we go over to the US dollar, Japanese yen. We see longs are cooled off. Shorts have been cooled off, but it looks like they're starting to become a little bit more aggressive. We take a look at the sentiment. It definitely is having a little tinge of red there. So the sentiment is slowly shifting from neutral to a more bearish tone. We are responding from some demand, so we did get that reaction to the upside from it, but now it's falling short and we can see it turn over and just drop. Last but not least, we have the Kiwi. Longs are very cooled off. Shorts were very aggressive, so they needed to take profits, which caused price to move up, which is what we were expecting. The sentiment is very much bearish. 76% overall exposure is to the short side, and we have negative 22,000 in net positions. So likely we see a push higher on this one, and then a reaccumulation of a short position, causing price to turn over and drop. Alright, so that is your CFTC report for July 9th, 2019. If you have any questions, let me know. Send me an email, or you can just visit www.whiteoakfx.com and you can get all our information there. And that's it. Until next time, take care.